And what's important about these questions here is all these questions are pretty subjective. Like I can get this list of answers to these questions, and maybe I don't know anything about any of that shit. Maybe I have no idea how to read a balance sheet, which is a different conversation altogether. But what this allows you to do is take all of this, give it to somebody else, and have somebody else validate the information that you got. All right, guys, welcome back to Jerk Block Talk. Today we're going to talk a little bit about something probably not every gym owner is going to go through, right? Which is the acquisition or purchase of another gym. And this is specifically referring to acquisition or purchase of another gym or business, not starting one from scratch. So I don't even know if I could speak to that coherently, starting one from scratch, because we did it 11 years ago or 10 years ago, whatever it was. And quite frankly, we did a terrible job of it. And I don't even remember how we did it. So couldn't speak to that. Now, we did just acquire another existing CrossFit gym, and in that process, I learned a lot, and I also asked a lot of questions, to which very few of those questions got answered to something that I consider anything to be my satisfaction. And I don't think it's because people don't know, I just think it's because not everybody's done it, so there's only a limited amount of people that have done it. And I think of the amount of people that have done it, there's only a handful of people that have done it successfully in what would be considered objectively a good deal for them, for both either the buyer and the seller. So what would be fair? So in that process, I kind of came up with a list, and I haven't seen anything like this. Not to say it doesn't exist, like it's probably out there somewhere. But a lot of the feedback that I got, which was useful, so none of the feedback that I got was not useful. I just found there were certain things that I was looking for that fall more on the tactical level or the binary level. Like, hey, I need a no shit, yes or no answer to this question, or I need you to give me a question I need to ask that is going to be very black and white. But before we get into that, you need to have the conversation with yourself about, like, should you buy another gym? Like, is that in your, your perfect day or your life plan or all that stuff? I'm not going to discuss any of that stuff. That's for you to figure out. I'm going to skip right to hey, I've decided, like, this is in my plan. This is what I want to do. Now, how do I go about executing that? Most people will tell you absolutely under no circumstances to start another gym unless your current gym runs itself and operates somewhere in the vicinity of a 30 to 33% profit margin. Largely, I would agree with that. There are obviously, I don't think it's an absolute statement or should be an absolute statement. I do think there are circumstances where, like, hey, opportunity has presented itself, and I would like to take advantage of that because for the most part, I've got things the way that I want them. Are they perfect? No. But are they ever going to be? Probably not. So I've got a list of questions up here that we'll talk about. And the first couple questions we'll talk about are like, these are directly to the seller. And those are questions about you trying to find out, like, why they're trying to sell, because they could be trying to sell because they're, because they are just tired and they want to move on to something else. They could be trying to sell because their business is not very good. They could be selling for any number of reasons. What I'd recommend is trying to find out what those reasons are and then verify that with some of the more specific questions that I'll have on the other side here, because why they're selling does matter, because you're going to inherit that gym, that business, the good things and the bad things that come with it. So when you ask these questions, what I'm trying to find out is, what are the negatives? What are the bad things that I'm going to inherit? And am I ready and willing to deal with those things? So some of the things you want to ask the owners when you're talking about this is, why are you selling? Like, just give me the 30-second reason on why you're selling. I'm tired, we're moving, I just don't want to do this anymore. Okay, cool, like, I got it. From there, you want to kind of find out, like, what is their involvement in the business? How many hours do you work in the business? And I don't mean, and when you ask this question, like, you should get a hard answer. Be like, I coach 0 classes in the gym, or I coach 1 class a day and do all of the administrative work, or I do this and I do all of the social media, or I do nothing. I just walk in and I make sure that the building's not burning down, and then I go back and do whatever it was I was doing. And these two questions right here will start to inherently give you some peek into what should be happening over here on this side, which I'll get to in a second. So how many hours do you work in the business? Do you pay yourself, and how much? It's important. This is one of those things, most people are not gonna wanna buy a job, but there are circumstances where that could be a good tactic for you, or an acceptable risk based on building it from the ground up where you want to, and having a timeline for like, okay, yeah, I am gonna buy a job right now, but in 6 months, if I have this thing all planned out, I will not have a job, I'll have an asset. So you one of those two things. Do you have full-time employees or contractors? And that kind of rolls right into the next one, which is roles and tasks. So this is kind of how the business operates. And then this over here stuff is kind of like the financial. This is the black and white stuff. But I do want to find out like how many other people are in the business. Does it all fall on one person? If so, how much does that person get paid? And then roles and tasks, who does what? And this is where you get to verify how many hours do you work in the business. Because if they have 0 roles and tasks and they're telling you that they don't do a whole lot, those two answers don't jive, and something there is gonna have to be rectified. So again, I came up with these questions because they really, really help you kind of pull back the curtain on like what is actually going on. Now, on to basically financials, like in the real kind of cut and dry, the numbers of what should be happening. And what I want you to understand is, I think there should be a certain level of empathy when you're going through this process, because what you're gonna ask, if you're smart, is you're gonna ask this person to drop their pants, pull up their skirt, however you wanna say it, and you're gonna see everything. You're gonna wanna see everything. If they don't show you everything, by and large, I would tell you absolutely under no circumstances should you buy the business. If they're an open book and they'll be like, hey, yeah, this is going really well, this is not really going well, or we're killing it, or we're getting crushed, you'll be able to verify all that through these things right here. So just be conscious of that and understand how that works, and understand what you're asking people to do, which is essentially tell you if they're bad at something, right? So think about athletes on the floor. Asking somebody about their business is actually way more intimate and way more revealing, and requires a certain amount of vulnerability for somebody to give you that information. So what you want to see, at least 1 year of previous tax returns, preferably 2, so you can get some sort of comparative numbers on there. And where are they trending? Are they trending up? Are they trending down? What does that look like? 6 to 12 months of bank statements. I want to see where every dollar went in that business, so that I can determine, in the event that they are either cash flow heavy or in the negative, can that be rectified by just curb spending or looking at where revenue sources are coming from? But mostly what you're gonna wanna see this for, the bank statements, is primarily for expenditures. I wanna see where every dollar is going. Are they using it as a personal piggy bank account and not paying themselves appropriately and then using their personal expenses to do that? Not to say that you can't do that through your business, but there's a strategy to that, and that should be designed with you and your accountant. So 6 to 12 months, run through all of those, and if you have questions, go back and ask them the questions. You want to see a profit and loss statement. Like, I just want to see, are they in the black, are they in the red? Like, what does that margin look like? And then you're going to kind of bounce that off with like some of the questions over here, like how much do you pay yourself? Does that jive? With the P&L, again, previous year, comparative, and month to month. So you'll get to see some trends in here, and it will be very, very much obvious, like what's going on in the business. Balance sheet, I just want to see where their assets are. Do they carry any debt? Like what's going on there? And then revenue. So now we're getting into the actual operation of the business and how the business brings in revenue and generates money. So I want to look at, basically, I just broke this down into 2 categories. It'll give you a pretty good snapshot, but these have subcategories in them as well. I want to see revenue by category, meaning like types of services. Do they run multiple programs? Are they have personal training, nutrition, strength and conditioning, kids, CrossFit, and then what do all of those look like? And that will give you a good idea if you're walking into something that is fairly safe from a multiple sources of revenue standpoint, or are they on the cusp because they rely on one source of revenue, and at that time during the year that everybody knows, like in August when memberships are down, or can they have trouble paying their affiliate fees, stuff like that, you'll get to figure out if you can balance that out. And then this is not nearly as important, but it's good to know, are they selling products? Are they Are they a product company that happens to have fitness going on in their facility, or are they a fitness facility that happens to sell some products? What do those two things look like? And is this beneficial to the company or not? And then I want to get into the member reports. So a lot of people will be like, we have 200 members. Great, I don't really care. I want to balance off my members by total revenue and see, is my average client value $50 per member, and it costs me, and I need to maintain 600 athletes to keep that revenue at the same number? Or do we have like $175 to $250 average client value, at which point I only need to maintain 75 to 100 members to keep that same revenue number? And that will go into and that will feed up here. Again, all of these questions are basically just checks and balances on the other ones to make sure that the information you're actually getting is legit. And then once you have those, I just want to ask about retention and what does that revolving door look like? Is retention 30 days? Did they run a special sale at somewhere in there? Did they have to bump up revenue to make it look like it was going to be really good? And then you can look at that retention and then bounce it off against previous year's tax returns, balance sheet, stuff like that, to make sure that it all is actually legit. So there's 11 questions on here. Again, some of these are to the owners and kind of like, what does the business look like from a day-to-day standpoint? And then what do the guts of the business look like here? Again, I just couldn't find a lot of information, so these are the kind of the questions I just came up with on my own and tried to do those checks and balances. And then once you have all that, then you can start asking the higher level questions, because I would argue that you have to have all of these, you have to have all the answers to all of these to determine if you're going to take the risk, if you're okay with culture problems, So a lot of the things that I got when I asked questions were like, hey, you need to make sure the culture matches, which I wholeheartedly agree with. The issue with that statement is this: that's a subjective question. Every gym owner thinks their culture is great. So if I don't have enough perspective, if I haven't been into enough gyms, me personally as the buyer, and I only have my gym as a snapshot, that opinion could be skewed wildly. So I don't know that that's the only question, but it is a very important question. If you walk in there and all of this stuff matches, but there's a really massive culture problem within the gym where, we'll just throw something on the table, like it was a competitive gym and like people don't talk to each other, that's going to be a problem. And when you try to shift culture, don't be naive to think that like these numbers aren't going to shift with them, good or bad. But usually when you go in there and you make changes with regard to culture, there's going to be a fallout there. Like there's enough gyms that have made a transition that there's enough data points there to suggest that. So again, just questions that I had on there that will kind of give you like a really good snapshot. And what's important about these questions here is all these questions are pretty subjective. Like I can get this list of answers to these questions, and maybe I don't know anything about any of that shit. Maybe I have no idea how to read a balance sheet, which is a different conversation altogether. But what this allows you to do is take all of this, give it to somebody else, and have somebody else validate the information that you got, or somebody smarter than you. Take all that stuff, give it to your accountant, ask them. Take the rest of those questions over there, give them to somebody else that you know, a member in your gym who probably does this for a living, has multiple business. Hey, does this stuff, or do you see any red flags here, right? So I just want to get data points so that I can get more and more and more outside eyes on this to get as many different points of view on should I do it or should I not as humanly possible. If you do that, you're gonna find a lot of common themes, and if the common themes line up, it's probably a good idea. Understand that there will always be naysayers, because this whole thing, quite frankly, is predicated on if you are risk averse or not, and what your attitude towards risk is. Are you okay with risk, or do you not like risk at all? Are you only risk averse if you're not able to calculate what that risk actually is? But you shouldn't do this in a vacuum. I asked a ton of people about this, a ton of gym owners, a ton of business owners, multiple accountants about this stuff, and I'm pretty happy with how I approached it, and I'm pretty happy with how the whole thing panned out. Now, I could fall on my face and be a garbage man in 6 months because this all failed, and that is a real possibility. I don't think it's going to happen, but it could, right? So when you're going into this, don't be naive to the fact that, like, hey, this all could fail. And most people will tell you, hey, 2 gyms equals, twice as many problems. For some time frame, I believe that's true, but it depends on how you look at it. Me personally, I'm looking at it from a standpoint of, like, they're not 2 separate gyms. It's one gym. I'm trying to make sure that those things operate almost identically, and then that they operate as one community, not 2. And that is going to be a lot of work, but long term, I think that's a much better solution. And you can kind of think of it as like, those 2 gyms are like my family, and they're each kids, right? Like, I love them both equally, and I basically oversee them the same, but they have their own personality, they have their own problems. One can be really good at something while the other one's really good at something. But ideally, they would both run very similar for the sake of continuity in systems and processes. So I hope this is helpful if you're looking to go down this road. Again, we just did it and closed just recently. So this is just my lesson learned on how this stuff works and how we went through it. So if you have questions about this stuff, please drop those in the comments. I'm more than happy to answer those for you, or just pass you along to somebody else that I talked to along the way. And if you like this content, please subscribe to the YouTube channel. All right, we'll see you next time. Thanks.